Good evening. Today is February 3rd. S&P 500 was trading mostly at night in a very tight range of 15 points. It sold off on the open to 38.10 and then slowly rallied 30 points to 38.40 and then sold off again at the end of the day. We had a weak close again, and it was kind of a range day, which is, I guess, normal after the last 2 days of run up. NASDAQ was underperforming S&P 500 the whole day today and closed down 50 points, even though Google was up 7% after great earnings, but Apple and Amazon were sold off. Even Tesla had a down day. And volatility continued to get crushed, even though WallStreetBets bros were discussing trying to squeeze the VIX ETN. Apparently, they don't remember what happened to XIV ETN, XIV. It was created by Credit Suisse to give traders an opportunity to bet against the rise in volatility. But because these ETNs can't really absorb super large positions and can't absorb very large swings in volatility, it could sometimes break it. And that's exactly what happened to XIV ETN. It was trading at 130 and was liquidated just a few days later when VIX volatility spiked from 11 to 50 in 2 weeks. So hopefully the Wall Street bets will review that lesson before trying to squeeze the volatility. GameStop was quiet today as most traders took a break from discussing GME stock and Wall Street bets in general. And the Reddit user, who is known as Deep FN Value, he was the de facto leader of the GME movement, if you want to call it, or revolution. He made a killing after making millions of dollars and turning his 50,000 investment into millions. But since the middle of the last week, he has lost $22 million, and allegedly he is still holding it. Which just kind of, to me, defeats the purpose of investing. Are you there to make money or to make a point? I don't know. And like we were saying, that it's not just the Wall Street bets they were making money and squeezing the other hedge funds. There were, of course, some larger players who were squeezing other large players as well. And today, the news are coming out about one such fund, Madrick Capital Management, made almost $200 million on the Wall Street bets fueled squeezes of AMC and GME. So 200 million is nothing compared to the 20 for one Reddit user. And that's just one hedge fund. And now that SEC said they're going to investigate Wall Street bets boys, I wonder if they're also going to investigate this hedge fund, for example, or are they only after the small players? Even Michael J. Burry from The Big Short was also talking to SEC, trying to enlighten them, I guess. He said he has found a sleepy stock, went to buy both stock and leap calls. And as soon as he bought the leap calls, the stock immediately took off. So this is the manipulation potential, and it's real. And if you think what is happening in GME is purely retail, no way. Big money is all over this. We'll see if SEC will listen. And oil was up again, almost 2%. And Ethereum made new highs, crossing $1,600. Bitcoin was up as well, crossing 37. And of course, bonds sold off. I'm sure Victor will have a lot to say about that.
Very exciting review. You've captured a lot of the bases. The bonds were at a 60-day low, closing at 167.5. They had been above 167. They've been in the 168, 169, 170 handle for months. Looking at, it's happened 30 times that bonds closed at a 30-day low with stocks up. in general, the last few times that it's happened, the market's up about 0.5%. So it's not really bearish for stocks. As to whether it's bearish for bonds, it's neutral for bonds. So it has no immediate significance. However, many people, maybe many ageist people, remember the 1987 crash when the market went down 2% on a Friday and then 20% on a Monday. And preceding that, the bonds had gone into a horrible decline. Yields were up to about 7 or 8%. Baker did it. That was the meme of the day. He said that Germany, that unless Germany had to what to keep the mark up, the Deutsche Mark up, he was going to bury it. And as soon as he said that, the market crashed 15 and 20%. So there's a remembrance of the time that bonds yields created the stock market. Then at that time, bonds went up the most ever. They went up about 8 points, and in a day or two, the Fed started buying bonds, and that quelled the stock market decline. By the end of the year, the stock market was roaring to new highs again. In general, we should remember what old Turkey said. It's a bull market, he told Livermore, who traded with my grandfather, and his name was Partridge. And Livermore said, well, how come, I trade in and out and I never seem to get anywhere and never seem to make the big money. I'm very good at catching the ripples. And old Turkey said, well, don't you realize that it's a bull market? And we have a bull market. He said, when you're in a bull market, you shouldn't try to take small profits. And if you think the market's going down, you shouldn't rush to get it down to, I mean, how many times does the stock market have to go up, set a new high, all-time high, before people start realizing it's a bull market? Now we're about 10 S&P points below an all-time high. 30% of the days in 2020 have been 20 or 30-day highs. We have the employment number coming on Friday. That's always good for very volatile stock market, and it sets the tone for a lot of people follow. All the banks use that as a signal as to whether they want to be long or short. They never short. But in any case, I'll be predicting that we'll be setting a new high by the end of the day on Friday. That has to be tested, but they tried awfully hard to get it down today. They had it down to 38.08. Now, what's the significance of these small ranges? Overnight, the range was 38, 28, to 38.38. There's only a 10-point range. Now you might say, well, that's not significant, but it is significant because anybody who trades in Europe and the European markets, there was no excessive churn, no excessive VIG. There was no opportunity for the public to lose more money than they have any right to lose. With a 10-point range, they can only be hurt in terms of the bid-ask spread, but they can't be hurt by the market having too much of a move and they're running out of capital and the big boys being able to relieve them of their positions. Because one of the major ways that the public loses when they take an ephemeral view is they don't have enough capital to compete with the institutions. So when it takes a small range, and as you know, the market makers, the members, the infrastructure, they never take a break. All the clearing fees that they charge, they're never satisfied. No matter how much money you have, CME or the CBOT, their seats are worth 100 million. The oil exchange is worth $40,000 when I started to 100 million. But what's the point? In other words, with a very small range, the members and the infrastructure can't murder the public, and so they have to try to fool the public. They start with a very small range, and then they immediately brought it down they brought it down by 1% in about 15 minutes. But if you remember what old Turkey said, it's a bull market, and it's a bull market in almost everything. Everything except gold. It's a bull market in Bitcoin. It's a bull market in the grains. It's a bull market in the Europeans. All the European and the Japanese market are doing much better than the U.S. Germany was up 1%. Japan was up 1% today, but we were only up 0.3%. And that's a very good thing to follow, by the way, the relationship between the European markets and the U.S. market. When the European markets are much better, that's good for the U.S. When they're much worse, that's bad for the U.S. That's our principle for the day. There is a very important book that was written, The Idea That Has the World in Its Grip, by Williams, and it's on the Foundation for Education site. There was a general feeling that he was writing in the early 2000s. He was writing about the woke idea then, but basically that the purpose of life was to sacrifice to create equality and to create to have a progressive agenda. But he said, you know, the funny thing about capitalism, he said, is who would have thought that there would be thousands of pedicure and manicure sites that would grow up, and that would take the place of all the businesses that have failed. And that's the beautiful thing about capitalism. They're very flexible, and they're always coming up with a new way giving the pitiless consumer what he wants. The market, to me, was like de rigueur. You know, it's getting more woke every day. There's absolutely no call for unity. They're trying to humiliate the former president, and he's fair game for that. He's Boppo. He's someone who's always being punched, and he just engenders more punching. I'm reminded of my friend Hobo Keeley, who lives in Blythe, California, and who was instrumental in, he was the world's greatest racket player. He was the paddleball champion and racquetball champion. I met him because in one of the tournaments I played, we both came out wearing two sneakers that had different colors. He points out he lives in Blythe, California, which is probably, it's a completely lawless area. You look it up. He's on the Daily Spec with millions of posts about Blythe, California. But he says, you know, he says everybody from Mexico crosses the border here at will, and then they get free health care, and they don't get vaccinated, and it causes a lot of it causes tremendous spread of the disease. And that's true in the Arizona and California. He says how could they be so stupid as to not know that that's the cause of the outbreaks in California? If you've ever seen President Trump's press conferences, it was fantastic when Katie McInerney, she was devastated with 100 hard questions.
Right.
For trying to humiliate and to catch the R's off guard. And she had an answer for everything. But sure enough, the Biden administration has been asking all the press to submit their questions beforehand, that the Democratic press secretary will know exactly what questions there are. We also had the Yale. Anyone who's applied, who's tried to do very, very well, and who's followed the college admission scandal knows that the Ivies are extremely biased against Asian students.
Right.
And sure enough, the administration dropped their suit against Yale today. Totally absurd statistical. Why? Because Yale and Harvard were able to show that the reason that they're not taking Asian students, and that the Asian students have to have like 100 points higher SAT scores than the average applicant, is because the Asians have a bland personality. And that's what Yale has come up with. So surveys show that even with all the executive orders and the transgender, I mean, showing climate change, we're also going to have equality among. Anyway, his popularity is decreasing, according to Rasmussen's survey. It's down by about 5%. The Post calls that's a new term that I like. They call it moral yoga.
Moral yoga?
Moral yoga, yeah. But we got to get back to basics. We're in a bull market, and the more moral yoga there is, the better it is for the market.
How do we know? How do we know when the bull market ends? Is there any
how do we know? When we had what we had in January, when we have 18 out of 22 days up, and we have the market setting a new high, a 20-day high, and half of all the days, and when you haven't had a reasonable decline, and that's what the market showed. They tried to create VIG and to do the public in, and with that 20-point decline, but it didn't work. When things like that start working, when you can have a reasonable decline, that will be the signal that the bull market has ended. But we're in an environment, you have to look at the niche. We have so much wealth floating around. The real estate prices are going through the roof. The stock market's at an all-time high. All markets are at an all-time high. This isn't an environment to fight the trend. However, I notice all the commentators are saying, well, AMC was up 3%, and GameStop was up 5%. But remember, when a stock goes down 50%,
right,
and then goes up 50%, it's still 25% down.
Right.
So GameStop went up 1% from 90 to 91 today, but it's still down about 80% from its high. Well, the brokers had a good time. They were able to stop everybody out and liquidate everybody who wasn't able to handle the margin call.
And the option sellers made a lot of money with the volatility like this. I've seen the prices for those GME puts that the stock would decline $100 and the put would also decline half in value.
Well, that's the point of it. That's the point. You get all these new undercapitalized people in the market, and there's a lot of hope. You can't just liquidate them and take all their money away. You have to give them a little hope. They'll certainly get killed in silver because they'll have to be fighting all the members and the exchanges. And not only did Hunt lose his squeeze, but he eventually had to pay 50% of all the losses that everybody had made in silver. So
today, I'm not sure if you heard that CDC director said that schools can now safely reopen even without vaccinating the teachers. So when Trump was saying that half a year ago, this was a no-no, but now it's safe all of a sudden. Nothing changed. Nobody's vaccinated. Teachers didn't get the vaccines, but now it's safe to open schools.
Well, the unions will fight that. And
Right. Well, I have another quick question for you.
Yes.
Out of curiosity, because you mentioned 1987 sell-off. Yes. Do you think the sell-off like this would happen, or rather could happen today, because we have circuit breakers, we have the Fed watching the market, but at the same time, you have high-frequency traders who could just unplug their computers and stop buying. So do you think today the situation is different, that we cannot have a 20%?
No, I don't think the situation is different. We had the flash crash, which was almost as bad, although it was confined to an hour or two. The markets, in a sense, it's evolved, and the commissions have gone down from 5% to 0.5%. Remember that the fact that you're not paying commissions has nothing to do with the VIG that you pay, because the bid-ask spread is offset offsets whenever the commissions go down, the bid-ask spread, and the fills get much worse. But to me, what happened in the last week or two, it's guaranteed to happen. The strong were able to make a tremendous profits at the expense of the weak. The weak all, a lot of their volume was in the 150, 200 area and GameStop, and they still haven't sold. It's now $90, and
Right.
And they've set a precedent. They've given hope to all the 6 million new investors, but
right, there are billboards across the highways in New York City saying, "Do not sell, hold strong, hold forever." And interesting that you have mentioned the flash crash, because that's another great example of how the infrastructure has won, and they have put all the blame pretty much on one guy, this poor guy who was trading from the basement of his parents, Navinder Singh, and he's the one who went to jail. And while all of the high frequency traders who were exactly using the same thing that he has found, he basically was a very smart guy who found the fault with the high frequency traders and tried to fool them and made a lot of money on it. And yet he's the one who went to jail, and all of the high frequency traders are still trading.
Along those lines, I noticed that the chairman of the Treasury Secretary, received an ethics waiver. She received only $800,000 from Citadel, but she was able to call a meeting today, and I like to play a Gilbert and Sullivan operetta, which from Pirates, which captures Gilbert was a very bitter and sardonic man. He had suffered from all sorts of digestive problems, but his one fault was he liked to, he was very ageist, biased. Anyway, I like to play the false one from the Pirates whenever Janet Yellen has a meeting, and she was little buttercup, and she was the only one that chief pirate, only woman that he had ever seen. And by the way, they did have someone like Little Buttercup on every ship who would sell candy, and he says, "Oh, false one, you've deceived me. I thought that you were 28. No, she turns out to be 79." I like to take a little crack at her. One of my friends says she's like an agrarian economist without the agrarian, and the idea that somehow she can call all the parties together, and all the parties want the market to be as usual, for the strong to take money from the weak, and if they all get together, that's what's going. The Citadel is certainly going to espouse that view. So I'm sure that's what they came out with, and as long as that meme holds, as long as the strong are taking money from the weak, we'll continue the bull market. Aside from the fact that the market will have to stop setting new highs every 3 days, if there's another run where the small investors, the 6 million new people are able to take money from the bigs, that could create, as it did at the end of last week, that could be a signal that the bull market is gone. I mean, things are haywire, and that's not cricket for the public to make money at the expense of the big boys. Right. So that will give you a better answer to your
yes, your thank you. Very, very, very good answer.
Okay, thank you.
A lot clearer. Thank you.
You've cleared up a lot of things for me. You put everything in perspective. And read Don Quixote again. It's not a nihilistic play, but it's the greatest novel ever written. There's a woman like you involved in it. Okay, thank you very much.
Thank you. Bye-bye.